We've got the rand holding below that R6.70 mark, so trading around 667, 668. It looks like we're still getting support from those firmer commodity prices, the gold price, and also a weaker dollar at this stage.
Indeed, we saw the rand trading in a very narrow range yesterday, but it maintained a firmer bias on the back of elevated global risk appetite and the weaker dollar. Also, the higher oil prices made the 25 basis points by the ECB all but a certainty, which is likely to keep the dollar well offered from a rate differential perspective. The rand is also likely to continue benefiting from the weaker dollar as other high-yielding currencies, as well as the pullback from the yen. We expect the rand bulls rather to continue drawing inspiration on the back of risk-on sentiment today. So a trading range of about 666 to about 676 is expected.
Of course, you mentioned the ECB rates decision. We had the Bank of Japan holding rates steady this morning, and we've also got the Bank of England meeting today as well to decide on interest rates. The ECB can't be much of a surprise because I think the market has priced in a 25 basis points hike. What's the market looking for there? Do they really just want to know what the ECB's thinking on interest rates is going forward?
I think the expectation is for a 25 basis points increase, but recently Trichet has mentioned that it's possibly, it could not be just one interest rate move, and markets are expecting at least another two interest rate moves to taking the rate to about 1.75% by the end of this year and possibly into 2% for next year. So the rate move largely comes on the back of the fact that inflation is quite high, as well as the fact that they do see the economic recovery making gains.
Well, inflation also sitting pretty high in the UK, close to 5%. Still the feeling that the Bank of England is going to leave interest rates unchanged today?
Yes, I do think they'll leave interest rates unchanged. They are cognizant of the fact that inflation pressures are rising, but they're also aware of the fact that if they do raise interest rates, they could be derailing the economic recovery.
Well, we had our gold and forex reserves out this morning. Net reserves 44.725 billion. So it's actually marginally lower in March from February. So it doesn't look like the Reserve Bank's been terribly active in the markets over the course of March.
We did see foreign exchange reserves improve by about 1.8 billion, but the increase in gross reserves and the decline in net reserves was largely as a result of due to revaluation effects, as well as the proceeds of the government's bond issue. In particular, we saw the the dollar depreciate against the euro by about 2.6%.
Manufacturing numbers coming out this afternoon. What's your expectation there?
We expect manufacturing production to have increased by about 3.6% year on year. That's really on the back of the fact that we saw the PMI data come in quite strongly the past couple of months, and really the business activity component of the PMI, which is an indication of actual manufacturing production. So we do expect manufacturing production to continue improving.